What the heck is going on in the Highlands Ranch real estate market? Hey, it's Sean Reddy of the Keller Williams Reddy Group, and each and every month we bring you 9 key market trends, what they look like month over month, which direction they're heading, and then we look at year over year, and finally we look at the last 3 years worth of perspective so that if you plan on entering the market as a buyer or a seller or both in Highlands Ranch, you know exactly how to play this funky real estate market. So without further ado, let's get right into it. First of all, we got 9 key metrics that we're looking at. And to lay those out, it's average days on market, median days on market, new listings, available homes, so total inventory, new purchase contracts, closed sales, average selling price, and median selling price of what closed in that particular month. And then finally, the median sold price to list price ratio. We look at percentages of increases and decreases, how many straight months these trends have continued, and finally we recap on what that might mean for you if you do plan on entering the market as a buyer or seller or both. So lastly, color coding. Red means it's moving in the favor of buyers. Green means it's moving in the favor of sellers. So now let's jump in. So biggest mover of the month, the median days on market. Now this measures what went under contract in May compared to what went under contract in April, is up 133%. Now that may look huge, and it is by percentage, yet the raw numbers went from 6 to 14. It is something to definitely keep an eye on though as the market progresses. Average days on market also up by 30%. Both of those reversed for the first time. Continue to watch that. Available homes. So we're going to look at this when we look at the graph. Yet this is the 5th straight monthly increase in available homes. Now that's measured at the first of each month just to maintain consistency in the data. What fuels that? Well, typically I would say that having more new listings hit the market and having less homes go under contract can definitely fuel that fire. Yet, check it out. The same exact number of homes hit the market the last couple of months, and purchase contracts increased by 16% from April to May. So that kind of debunks that myth. So what happens here is as more homes are listed and kind of bouncing around in terms of purchase contracts, when we look at month over month for the entire year, there's going to be some stale listings out there where the market's passed them by. And those are going to continue to languish on the market till they either, frankly, drop their price to where it's actually going to sell or decide to exit from the market, withdraw. So there's where we have the 285 homes for sale. Where that's coming from. Now, closed sales up by 1%. That's measured to the, not broken out into decimal points. Closed sales up by 1 unit. Average price and median price. Now, these two opposite directions. 4 straight months of rising average prices, 2 straight months of falling median prices. What does that tell me? Well, there's big sales out there that can skew the average that don't necessarily impact the median as much. So let's keep that in mind. We'll talk about that here in a little bit. I'd be remiss to say, though, going back to closed sales, that is a 4th straight monthly increase of closed sales. Median sold price to list price ratio. Up slightly. By the way, what that measures is what was the final asking price, what was the final selling price of the homes that closed in that month. That is up nearly 1% month over month. And now let's look at what this looks like from a year over year standpoint. Okay. Good amount of red, not as much green. I'm going to start with price. My eyes are going directly to the average price. The average price in May of last year of what closed, let's go with median, was $740,000. The median price of what closed in May of this year was $713,000. That is good for a nearly 4% decrease in median price. Now, does that mean values across the board are down 4% year over year? Not necessarily. But the homes that are selling are down 4% year over year, nearly 4% year over year. Now, the average price, not as widely impacted because of the reasons I gave earlier, down 0.7% year over year. But down is down, guys. Like, you look at the historical appreciation trend line, and it's 4% annually. And of course, we're coming out of years where that was 20%, 25%, which is unsustainable, of course. So now we're seeing softening in prices. Now, what fuels that? First of all, 72% more homes on the market this year than this time last year. Last year, 166 available for sale. This year, 285. New listings relatively flat, 6% increase, but the raw number there is what, 12? But check out the days on market. Median days on market up 100%, average days on market up 63%. Homes are just simply taking longer to sell. Closed sales are up 4.5%, and I think that touches on all 9 of these metrics, which I kind of flew through this because I want to get to these graphs here. All right, so first, this is average and median days on market, and the time horizon on these graphs is almost 3 years now. You can see where the peaks and valleys are in market times. Peaks always in the holiday season, valley is always in the spring. Not much more to say on that. But look at this. This is my favorite. This measures on the same graph, number of new listings in any given month, number of available homes, total, and new contracts. And I'm going to start with the new contracts in the yellow. Now, we've been hearing from Main Street media how soft the real estate market is, yet purchase contracts, let's go across the line here, 166, is that? Yeah, 166 in March, 159 last month. We haven't seen numbers like that in this 3-year time horizon. So purchase activity is actually up a pretty good amount compared to the average here in this timeline. What's also up though is new listings. Check out new listings fluctuating back down, and now for the second straight month, over 200 new homes have hit the market. But then check out the total inventory. It goes down in the winter, comes up in the summer, fall, down in the winter, up in the summer, fall, but then straight up. So more sellers entering the market on these blue dots, relatively flattish over the last few months on the yellow dots, leads to this red dot. I don't want to call it an explosion, but that's a significant amount more homes on the market than any time in this time horizon. In fact, any time in the last probably 12-ish years in Highlands Ranch. Closed sales, up and down, nothing new there. And then finally, here's the median and average selling prices. Now there's huge jumps in the average. That's always going to exist because a $7 million sale can significantly impact the average price in any given month. The median price is a little bit more telling, and look how flat that is over the last almost 3 years. In fact, latest 713. I mean, we saw higher than that a year ago, as indicated by the year-over-year drop. It's not that far off from March of 2023, 2 years ago. And finally, the median sold price to list price ratio, pretty flat there. There's some peaks, of course, but nothing really to add commentary on that too. Now, what does all this mean? Main takeaway here is there's a real estate market. It's always going to exist. Now, there's plenty of media stories out there that it's dead or flat or, falling, whatever the case may be, whatever you see out there. This data tells the story, not a news anchor. So if you want real data, let's say you do plan on moving, you're entering the market as a buyer or seller or both, trust a professional who's in this on a daily basis. He or she's going to know exactly how to guide you through so that you can make the best move for you. And there are opportunities to do that. So if you want some advice, let us know. Drop a comment. This is Highlands Ranch wide between all residential property types, by the way. So if you want something that's more geared to your specific sub neighborhood, let us know. Again, put it in the comments. Happy to make that data for you, and I'm so happy you stayed and watched this video. Again, Sean Reddy of the Keller Williams Ready Group, and we'll see you next month.